the lessons I've learned. You need to know the difference between investing and trading, right? Look at the numbers very carefully. If you're buying a Philippine growth story, the Philippines, the next 10, 20 years will probably be growing compounded rate of return of 10 to 12%. No need to think otherwise. Set aside 10, 20% of whatever you have and start accumulating the index stocks or individual issues. Look at the numbers, 90, 95% win rate. Buying a good company with good values. When you're trading, yes, you can increase your return. The only problem is you need time. You need to attend this kind of seminars, right? Hit ratio, 50, 60%. And what is your trading style? My trading style is simple. I'm a momentum trader. I focus on momentum. I focus on position trading. I only trade the left side, which is trend trading. This is what we call the easy money. Reversals that has problems, we don't teach reversals. We don't teach capitulation. We only do it if the whole market is collapsing. Only in the Philippines. I cannot do that in the States. If a stock is collapsing in the US and I buy it, I'm dead. It just goes sideways and then go down new lows. It's parang CHP. Parang CHP. Down to 80%. Can you imagine that? Baka totoo na. Pero palaging totoo na. The second, which is very important, is you have to treat trading. By the way, this is trading. This is not investing. Trading is a business. Follow the rules. Follow the setup rules. You have to know what are the rules. When to get in, when to get out. How much are you willing to lose? Very important. No jackpot mentality. Everybody likes to make jackpot. So if you understand all the different rules, there are 5 strategies which you have to know. We need to show you all this so that you understand what was happening. Me, if I'm trading, I'm just doing trend trading and momentum trading. Maybe a little bit of swing. But after that, I don't touch it anymore. Then I wait for capitulation to come in so I can deploy. But when the market breaks down, I'm always out of the market because I'm always hoping that there will be a crisis. I love crisis because that's the only time. In fact, my children will always say, Dad, wala ka naman ginagawa, araw-araw nagkakape ka lang eh. Naghihintay ka lang ng crisis. That's true. But I need to keep myself busy. I need to trade. Every day I trade. I trade more than anybody. I'm very actively in the market. Very active in the market. I trade the US market. 30 minutes, 1 hour, tapos na ako. Win or lose, I scalp the market. This was presented, I presented this about a month ago. I did a workshop, and I showed this. You have to know the companies you're buying. You have to know at what cycle they're in. Are you a startup, a young growth, a high growth, mature stable, declining? When you are trading mature growth and mature stable, is it a buy high, sell high, or a buy low, sell high? Answer me. It should be a buy low, sell high, right? If you're buying mature growth, mature stable, you don't want to be buying buy high, sell higher. Because look at Juan's presentation a while ago. Every time it breaks out, it just hit the resistance. Because people will sell at resistance. And that's how it is. You want to buy cheap, sell it higher. Now, when you're in a startup, mature growth, young growth, high growth, you can deploy the buy high, sell higher. The market cap is smaller. The growth is 20, 30% more. Then you have to know what are the strategies that you need to use. If you buy Meralco, break out, do you think it will go up? It will go up maybe for a day or two because all of us are buying the breakout. Right? That's why when the chartist tells you, buy the breakout, chart lang, you need to qualify what kind of chart you're using. Because if you don't qualify that, then the expectation will just be very different. Very different. This I presented in the market outlook. It's all about 10-year treasury in the US. So that you understand what is risk on, what is risk off. If you follow the last 5 years, based on yields, the yields are going down, the market goes up. Yields goes up, the market goes down. It's just a risk on, risk off. You have to follow the Fed, what the Fed is doing. If the Fed is increasing interest rates, what will happen? If the 10-year treasury is going up, automatically our emerging market will go down. It's just so I shouldn't say that word again, so simple. But that's what it is. Know where the money flow is. Know where the liquidity is coming. Interest rates goes up automatically, or the research people will increase the risk-free premium, the risk-free rate. Automatic yan. Then the valuations will go down. The value will go down. You need to understand that. You need to know, to have, a lot of people once asked that question. I think in the last summit also, they talk about what? Can we make trading a living? What is our answer? Yes or no? No way. Especially if you're just focused on the Philippines. There's no way you can make it. I tried to do that also when I was in Canada. I was trading for a living. And I didn't survive. 6 months, all alone by myself, down in the basement, trading global markets, trading the commodities. I didn't lose money, but I never made money. Because alone in the basement, with your washer and dryer bothering you every second, no way you can survive. Especially you're putting food on the table. No way. So you need to focus on your work. You need to focus on, or get somebody to sponsor you to become a trader. Right? And learn as much as you can. Once you learn it, then you don't have to worry about where you're getting your food, your cash flow. So first is you need to understand how to do it properly. Do it or no properly. Of course, this afternoon, I think they'll talk about the journal, right? How do you keep the journal so that you can reflect and review what you're doing, whether you're right or wrong? Because always the challenge of everybody is that sometimes you think you're doing the right thing, but you can't see it because we have our ego and our blind spot. This is from Ray Dalio. Please look at it, the principles of Ray Dalio. It's an animated 30 minutes. It talks about our ego, how do you control it, and also understanding that we're all born and wired differently. We cannot see everything. We have our own blind spot. That's why you need to be in a trading community so that we can help out. But please, look for the right community. Or just look for your partner, your wife or your husband. Right? When you have to report to your husband or to your wife, honey, tama ba itong ginagawa ko? You should be accountable to somebody, because if you're not accountable, you will think that you're doing the right thing, but indirectly, you're just losing money. Just a waste of time. Focus on your work. Focus on your business. All right, so let me end. Let me show you some of the books that I did very well, inspiring me. One Up on Wall Street was given to me in 1988-99. It's looking for the 10-bagger, looking for the high growth. Then I stumbled into finding the next Starbucks. How do you build this kind of business? The 4 Ps, people, product, potential, predictability. Then, of course, the classic technical analysis of stock trends. Nowadays, you don't probably need to read it. It's so difficult, the classic charting. It's now YouTube available. So, video YouTubes, please go over it. Value investing, value momentum investing. This is what Adam Koo was saying. You learn how to trade, make money, and put it in a company. Values. Second is the laws of valuation, which I showed you. That very good. Third is the article from Drunken Miller. It's all about liquidity. All right, let me close. My daughter asked me the other day, Dad, what is your quote? I said, luck goes to the prepared mind. Dad, hindi sa iyo yan. So ito hindi rin sa akin, siyang gumawa. We must always have an open mind. To be open to new ideas, to have a glass half empty, to be humble enough to say that there are things that we don't know that other people do. All right, thank you very much.